but we're going to do some discussions, and I'm going to talk about how if I were a new student of my own work and I had recently completed my 2024 mentorship that's on this YouTube channel for free, and I was able to go through a lot of the core content that was produced in 2016, 2017 through my paid mentorship. For anyone that is always asking, can I join your private mentorship? It's basically uploaded for free on my YouTube channel. Okay, so um, dig into it, enjoy it, and study it, and take what works for you out of it. Not everything that I have ever taught is required to find consistently profitable trading. As you'll see in this lecture series, over the next 20 videos, which won't be very long, their focus is primarily to illustrate how one might arrive at a model using the information that's been brought to light on this YouTube channel. I want to kind of make it very simple. I don't want to have every possible ICT concept, that's available on the YouTube channel. I kind of want to focus on what was discussed primarily off of the 2024 mentorship content. So for folks that went through it and it was your first exposure to smart money concepts or my life's work, if you will, that introduction will be a little bit amplified. But again, even with this lecture series, I will not exhaust every possible concepts, approach, or application. But I will hopefully provide you a example of an executable trading plan. It will be employed with a live real money account that's a regulated CFTC regulated broker. That means it's not market replay. That means it's not demo, it's not paper trading. And you do have to pay taxes on the income that you make off of it. So if we are to go into this with the intended goal that I have for it, I want to cover basically five central tenets that anyone that goes through my content should try to consider as focal points. Okay, there's a lots of different rabbit trails and things you can go down and study on a topical basis on this YouTube channel. But for the folks that simply want to have something to go into their back testing and look for them to go into a tape reading endeavor where they watch price, they don't push a button, whether it be demo or live, and then they forward test with a demo account or paper trading account. And then eventually, and some of you will come to the point at which you'll discover that you feel that you have arrived at consistency in your paper trading or demo trading. And when you decide, not when I decide for you, not when anybody else should decide it for you, it's something that you're going to come to your own decision. And you're going to want to eventually move from paper trading or demo trading to a live funded, your real money account. When that happens, I get lots of questions on how might that work for someone as a student. I'm going to pantomime in the month of February how that might be done. It is not a panacea. That means it's not the be all end all, the only way it can be done. It's just to provide an example. Okay, so that way it gives a real world, realistic approach on how to transition from demo and paper trading to then slowly rolling out the implementation of live risk with real money. Okay. Now, I know there's a lot of folks in my community that use prop accounts. That means these companies that allow you to trade with demo accounts. And then if you're correct with them and you do all the hop, skip, and jump through the things that they add into the mix as a as a trader, these rules that they create for you that, in my opinion, are above and beyond what is necessary. They complicate it, in my opinion. It's sold on the idea that it's to help you, but it's really a handicap. And very few people have the wherewithal to get through those rules. So I'm not trying to counsel you to use prop accounts. I am encouraging you to eventually, if you decide to do this with real money, use a small amount of money. Okay, now what's a small amount of money? Well, that's kind of relative to who you're talking to. A little bit of money for me may not be a little bit of money for you. And a lot of money for me may not be a lot of money to some of you that are listening. So it's all subjective to what it is that constitutes a large amount of money. But if you look at the prop firm companies, if you look at what they're allowing you to lose before the account is shut down, if you started a live account with, say, half of what they allow for instance, some larger known prop companies may afford you to lose a hypothetical $3,000, and then you are essentially blown out and you have to reset. Others are $1,000, some are $1,500, and it varies from company to company and whatever, I guess, plan or option you use to trade through. My opinion is that if you're going to trade with live funds, the very minimum, the very, very, very minimum is 1,000 US dollars. Now, when I say that, that doesn't mean that you go out and try to trade larger than you should. With a $1,000 account, if you trade with a micro account, which is what you're seeing this chart here, in the upper left-hand corner, you can see it says Micro E-mini NASDAQ 100. That means the point fluctuation, that means 1 point higher or lower represents a $2 profit or loss per contract. Now, a mini contract, 1 point fluctuation higher or lower, is a multiple of $20 profit or loss, depending upon the direction of the position you're holding. My advice is no one that ever transitions from paper trading into live account trading and or prop should ever go right into mini contracts, ever. Because you're transitioning to a point at which now risk means something. It doesn't mean as much when you're trading with a demo account. It doesn't mean as much when you're tape reading or back testing. It doesn't cost you anything if you're wrong. It doesn't cost you anything in terms of pride or ego, and certainly doesn't cost you anything in terms of monetary loss. So starting with the very minimum that's available in terms of a futures trader, you have to start with the smallest or least in terms of risk. And that is not a disadvantage. It is extremely advantageous for you to apply this approach going into live trading. So there's 5 central tenets I want to cover, and then we'll get into the nuts of this lecture because I don't want it to be too long. So making money with smart money concepts 101. Okay, the premise is this. You're going to settle in on one market or one asset class. Okay, and since I'm predominantly talking about initially, but we're going to talk about Forex too in this 2025 lecture series. But I have to start here because this is predominantly where I'm going to be focusing my actual trading. The futures market, since I like trading index futures, I have a choice. I could trade the Dow futures, I could trade the S&P and or the Nasdaq. I prefer the Nasdaq because of its volatility. It means it's a lot more wild when it moves, and because of that, it will afford me a lot of setups intraday. Okay, now I could trade less than 1 minute. I can trade 1 minute charts. I can trade 5 minute charts, a 15-minute chart, an hourly chart, a daily chart, a weekly chart. But for the sake of using the information that was covered in 2024 and the core content, I'm going to try to focus on 1 minute or higher. And the idea is to teach how to go into trying to find a consistent income driven model. It is not a get rich, it's not a win a Robbins Cup, it's not a competition model. All those things can be tweaked, and I'll talk about that before we close the lecture series out. I don't know what point that will be, but sometime before I end it this year, I'll talk about how you can tweak that and make it so it's Olympic level. But I don't want anyone to go into this with the expectation that you're going in there to try to make the maximum amount of money. You're not trying to be the newest, highest paid out ICT, SMC, but don't want to call yourself an ICT student, record holder in terms of what you make in prop. So it's meant to make your ends meet. That means whatever bill that you have monthly that's a real world cost for you, it might be a insurance premium, it might be a car note premium, it might be your rent or mortgage payment or a percentage of it. You should sit down and figure out what that is that you're going to target as your realistic goal. It doesn't mean try to make all of your bill money, because that's again trying to place an Olympic level expectation on yourself as a brand new trader transitioning from demo into real money risk with live funds. So you want to have very, very soft rollout of what it is that you're targeting. So by settling in on one market, and I'll be using predominantly the NASDAQ futures contract, I will be starting with a micro account, or not account, but employing the micro contract, because I want you to see how, even though that's a very small fluctuation in terms of monetary profit or loss, it starts to build up quickly. And that is unfortunately something that is overlooked by everyone, because they all see people trading 30 contracts, 15 contracts, multiple contracts of the mini, and they see what the payouts can be if those are consistently done correctly. But they don't understand the power of fear and greed while holding those positions. And that's why you don't see most people that trade that big size, they don't hold those positions very long, because it wears them out emotionally and psychologically. So I want to kind of show you how to hold on to very small positions and gradually transition to being comfortable holding and letting the concepts do all the work for you. But you have to grow in your understanding where there's now real money risk. And that can't be learned from a book. You can't hear me talk about it. You can't hear other people talk about it. You have to experience it. And so many of you that have tried to do this in the past or are about to try to do it, you're many times regretful for having done so, because you're trying to do too large of risk, holding too big of positions, or trading too often.